Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news the American middle classes are expecting significantly higher pay and higher costs in 2021. But we start today noting the IPCC's latest peer-reviewed update, which says there's already enough greenhouse gas in the air to heat the planet by 1.5 degrees, which is thought to be a climate tipping point. For New Zealand, they forecast more rain in the south and west of the country, less in the north and east. They also expect more river flooding and faster glacier retreats, with them likely to disappear during the century. Elsewhere, the latest New York Fed Consumer Expectation Survey for July shows consumer price inflation expectations are firmly anchored at a high 4.8% for the next year. However, the same survey reveals household expectations for year-ahead earnings growth and the likelihood of finding a job rose sharply in July. Across the board, Americans expect to pay sharply more in the coming year for everything, but expect their pay to rise only 2.9% to match that. While such surveys really work out with these signals, the expectations do strongly affect how people plan and react. There is some evidence Americans may be underestimating their pay prospects, however. The latest JOLTS survey for June shows that there is a surge in both job openings and quits, suggesting that their labour shortages are still getting worse. While the acceleration in payroll gains in recent months suggests that it's not proving as long-lasting a drag on hiring as some had feared, that is in part because employers have increased wages more rapidly than anticipated. Tighter labour market conditions will likely put more upward pressure on wages over coming months. And China's consumer inflation came in marginally higher in July than expected, but still lower than for June. Retail prices for pork, beef and lamb are now all falling on a month-to-month basis. But their factory sector reported PPI up 9%, which was also higher than expected and matching the 13-year high reached in May. This is a real pressure point for the core component of the world supply chain. And Canada has opened its borders to fully vaccinated American travellers, but the Americans haven't reciprocated yet. Meanwhile, the city of Beijing has cancelled all large-scale exhibitions and events for the remainder of August, the latest sign of economic disruption due to the fast-spreading Delta variant there. They're sticking to their elimination strategy. The US Treasury 10-year yield starts today at 1.32% and up another 1 basis point since yesterday. And the price of gold took another hit overnight, dropping right out of favour and down a further $33 to $1,730 an ounce. This time last week it was $1,811 an ounce. That's a weekly retreat of 4.5%. And oil prices are lower by $1.50 a barrel from this time yesterday. So in the US, they're just under $66 a barrel, while the international Brent price is just on $68.50 a barrel. And the Kiwi dollar opens today at 70 US cents. Against the Australian dollar, with little changed at 95.4 Australian cents, and against the euro, were unchanged at 59.6 euro cents. That means our trade-weighted index starts today still at 73.2, and still in the narrow range between 72 and 74 we've been in for the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.